Hello and welcome to this Diwali special edition of Commodity Champions. I'm Manisha Gupta. The commodity markets have lit up in anticipation of a solid demand going forward. The gold prices hit all-time highs in both global and Indian markets, followed by silver, which has outperformed metals, by the way, in 2024 till time. The highs came back on the factor such as fiscal instability, de-dollarization, geopolitical tensions. The only sector that hasn't done so well has been energy, where the prices have declined, with OPEC and IEA cutting forecasts for global demand for this year and the next. While the precious metals are outperforming, the industrial metals are a mixed bag, with the copper, aluminum, zinc performing well, but steel, nickel, iron ore are all down on an year-on-year basis. Today, we track all of these commodities and get a sense on where the prices can move in the year ahead. I am now joined by Kishore Narne. He's head of commodities and currencies at Motilal Oswal. Ajay, Kedia's director at Kedia Commodities. Also joining us are Pranav. He's VP at EBG Commodity and Currencies at JM Financial. And we have Hansen, head of commodities at Saxo Bank. Thank you, gentlemen, so much for joining us. All to you first. And it's all about the international markets when it comes to commodities. Going forward, it's going to be important to see on who the next US president is, and that would be 10 days away from here. Would you say the commodities as a sector, especially gold, has factored that in?
Well, happy Diwali to everyone, and especially my 1,000 plus colleagues in Gurugram. Well, the market has priced in a lot, I think, at this point in time. We saw last week how the rally was driven by the worries that we might have a red sweep, basically that the Republicans will control both the White House and the Congress. That will obviously leave the road open for some of the policies to be implemented. And what strikes me with these are that they will all lead to higher debt. And that was really one of the reasons why we just recently saw both yields, the dollar rise, and gold rise at the same time. So for now, we're pricing in some uncertainty post the US election. We may see some profit taking as the initial reaction, but I think overall, the reason why gold is up more than 30%, silver nearly 40%, the reasons behind that have not gone away, and I think they're going to stick around for a while, and that's why we maintain an overall long-term bullish view on these two metals.
All right, so well, the events will come and go, but the bullish view for a longer term in gold and silver prices just about continues. Kishore, what's your sense between gold and silver? What would you still look to buy? The last 1 year, the last 12 months have been very bullish. And I remember you telling us that a lakh rupees in silver is a matter of fact, a matter of time rather. From here, are you more bullish? What kind of returns are you anticipating, especially for silver in the next 1 year?
Of course, we are bullish. We are more bullish after our initial target is now achieved. So you pretty well know that we have revised our targets to 1,25,000. So roughly it translates to around $42, $43 in dollar terms. So again, there are forecasts anywhere between $38 to $50 in the world floating now. So I don't deny that 50 is not possible. So there could be a possibility. So that will take us to around 1,48,000 in rupee terms. But having said that, the only uncertainty at this point of time is the US election and how it's going to pan out. But despite that, that's where the gold can get its cues from. But I think silver will still continue to be an outperformer. So we are bullish on gold and silver both. Gold, anywhere, I think we have revised our targets to 28.50 on dollar terms. The most bullish case is around 3,000. But in silver, 42 to 43 is the base case scenario for us. And the bullish case probably around 47, 48.
And before we reach those kind of levels, are you anticipating a correction? If yes, then up to what levels?
I think corrections are the integral part of this rally. We have seen those corrections coming up, and at times it's very, very short-lived. And global liquidity is something which is causing these things, both in equity markets as well as in commodity markets. The corrections are nowadays it's a matter of days. And by the time you realize, the markets are again back to all-time highs. So that's something, a very different phenomenon. I think corrections are possible. So yes, if you are a very long-term investor, or maybe you're looking at a year or plus or so in silver, probably any day which it's down by 5, 7, 8%, it's a good time to pick up silver. So it's part of it, but I don't think there'll be a sustained a quarter of correction or something like that. So it will be a mere days of volatility.
Well, that is very well said, yes. Before you get a hang of what the markets are doing, they've changed yet again. Ajay, what is your sense? I remember when we started 2024 and you'd said 2024, 2400 gold is what you were looking at that point in time. 2400 is come and gone, and how? We are very close to 2800 now. Are you looking at a correction from these levels? Are you buying on dips, and what are your targets now for 2025?
See, Manisha, I think whatever the rally up till now we have seen has been already, we can say, the ecosystem or fundamentals were continue being supportive since 2022, and I still prefer bullion has not rallied much what we were expecting as compared to equity market. Take example of S&P 500 versus GSE, and most of the time I rely on data of index which suggests commodity is still having a very good scope. But coming back on the rally, what we have seen in last 1 year period, that was a fabulous rally. We have never seen this type of movement, and the geopolitical tension. ETF buying is one of the newest thing we can say, because now everyone is running out of gold. We have to buy bullion, silver and everywhere. So I think, for 2025, we are bullish, but I think with a very short period rally, what we have seen, certain technical or what we can say, we need a very new reason that can give more support
prices further higher.
So I think prices would be more volatile in 2025, because with the given geopolitical tension that has discount, interest rate cut, already we have seen the rate which we were expecting 1.25 should be there from Fed, but now it's hardly 0.75, which is again a slightly pullback. So I think the volatility would be there. On best case, we would see prices moving towards 3,000, 3,050 or near to 3,100 level, but the second half is going to be a little bit corrective mode. Again, we may see level like $2,400 mark in international, whereas on domestic side, maybe because of this duty adjustment rupee, again prices should be near to 70 nearby. But coming on silver, I think the best indicator would be gold-silver ratio, which is currently around 81. This year we have seen multiple of times ratio was around 90, but not at all holding. That clearly shows slowly and steadily silver will outperform gold. Okay. If we see longer term perspective, I think the average could be near to 66, 68 nearby. That means silver has still gist. As of now, we are targeting $40 mark, but as we have came out with a report, we may see in next 2.5 years or 3 years, $70 mark should be the level, because of clean energy demand, or demand perspective has totally changed in last 10 years scenario. So we are more bullish on silver rather than gold.
Whoa, okay, yes, we have read those reports of $50 an ounce and $100 an ounce of silver, but 70 yet again being talked about. We spoke about gold, but I do want to get your sense on silver as well. How bullish are you in the next 1 year, 2 years, 3 years? Clearly, precious metals as a sector sees long-term structural bull runs. How are you treating this one?
Well, you almost need someone to go the other, take the other side of the trade. But unfortunately, I have to say I agree with the gentleman that's already commenting on silver. The outlook looks good. I would say the supply outlook remains fairly tight. The fact that we are, if you are an investor at gold at this point, you have to really feel that prepared to pay a record high price, in the assumption that someone is even prepared to pay an even higher price tomorrow. Silver, as we know, had peaked at $50 quite a while back, and that just from that perspective makes it, from an investment perspective, an easier investment to consider compared with gold. So with that in mind, I agree as well with the ratio coming down closer towards its longer term average. And with that in mind, and also looking at 3,000 as a potential target for gold, then yes, we are looking at 40 plus for silver next year.
All right, very, very bullish targets coming in there. Pranav, what's your sense? How are you looking at gold and silver both? And if you had to spend your money, invest your money, tell your clients, how would you advise them putting their money between gold and silver?
What we have been currently at current prices, we have been advising clients to at least book 50% of the profits. Prices have already rallied from around, the cut that we had seen, duty cuts from those levels of 68, 69,000. It has now trading coming close to 78. Silver is, up 1 lakh. So we see a round of profit booking, year end is there. So we may see some profit booking in the international market also. So this is the right time. At least we should book 50% profit. And the corrections that again we see as a buying opportunity again it dips. If we look at the prices in the international market, gold $2,700, $2,635. I don't think till these two supports are breached. These are crucial supports. Till these two are not breached, the bias is expected to remain positive. As my colleague said, that it can hit 2,800, 2,850. Yes, that is the possibility in the near term. And in silver too, we are bullish. Looking at prices targets is around $39, $40. In the Indian markets, we could see silver testing levels of 1,15,000, 1,20,000 levels as well in the coming year. But again, advised to buy at dips. If you considering adding in a portfolio and how we can allocate both gold and silver, I think 50-50 should be the right ratio. Okay. With buying silver in a staggered manner at dips and adding gold also at dips in a staggered manner.
All right. So there is no short call. Well, you could take some profits, but those would be buying opportunities very soon going forward. And all-time highs in case of gold and silver is what our experts are predicting for the next year as well. Well, gentlemen, stay on with us. We'll go for a very short break. We've spoken about gold and silver and how you should be treating them within your portfolio. But metals is yet another thing. And the kind of decline that we've seen in energy markets, how should you be trading with that? Holding them in your portfolio is something we'll discuss after this break.
I've known Michelle for years.
All right, gold and silver are a must in your portfolio. Both of them are expected to hit all-time highs in the next year. But what about metals? Because it's a mixed bag, really. Because when you look at lead and nickel and steel and iron ore, they are down in the negative in the last 1 year. The gains, though, have come in quite smartly for copper and even better for aluminum, and zinc clearly outperforming with 24% of gains in the previous year. Ol, what's your sense within metals? What are you watching, and what would you be your top priority here?
Well, we're seeing the divergence between metals used for the electrification and those used for industrial means diverging, and especially those related to Chinese demand. The Chinese stimulus that has been announced within the last month does not seem to be enough at this point, really, to address the structural issues that China will be facing in the coming years. And that has basically dented the demand, I would say, for some of these industrious metals, steel, iron ore, especially. Whereas if you look at copper, it's a different story. The copper demand has been a China story for many years, but it will eventually become more and more an international story as well, as this electrification continues to gather momentum, and with that, the rollout of grid infrastructure and so on. And adding to that, the tight mine supply that is also expected to emerge over the coming years. Right now, we are seeing a couple of false starts in copper, as an example, this year, basically because there's a lot of speculative interest waiting to get involved in copper. And we've had a few false starts simply because ultimately supply and demand has to send a signal that the price can go higher. And so far, we haven't really seen that. So for now, it's in a wait-and-see mode. I'm not really seeing much in terms of price movements in the short term. We need to see some of the inventory levels held at warehouses come down. But over time, I'll say it's a long-term bull case for that as well. The other is I'm struggling a little bit more. The world is still dealing with an overcapacity, in terms of production capacity for something like steel, and we need to see cutbacks in order for that to be more balanced. So for now, the upside story is primarily those based on or focusing on the electrification.
And even within that all, is there something that you're picking for the longer term? Sorry,
come again?
Are you picking anything at all then in case of metals for a longer term? You said short term is not so bullish, but for a long term scenario, is there a metal that you would want to add in your portfolio?
Almost certainly copper. I think even at these levels, we probably reached levels where these levels are acceptable. Not the highs we had earlier this year, but these levels, I would say, it is an area to start accumulating, because I think the downside risks over time is going to be relatively limited there.
Kishore, what's your sense within the metal space? What would you want to add into?
I think I like zinc here. Probably again, it's already rallied, but again, we are entering this year into another 164,000 tons of deficit. Though 25 might cover it back, I think the backwardation is showing a big story there. I think it's a record high backwardation. $58 is, I have never seen that kind of backwardation, which is showing that some kind of tightness there. And as he rightly mentioned, that both the commodities which are used in electrification has actually going up, and stimulus has no impact whatsoever, as yet, in the sense because the stimulus was aimed at clearing the real estate inventory, which doesn't create demand. So it's actually a cleanup of of the problems rather than creating fresh demand, actually. So this is a much longer shot they have taken. I think direct impact is not there, but still zinc, I think there is another 30% upside.
Okay.
So roughly from 280, we are looking at 450 kind of levels in India. So 30%
in the next
upside.
1 year, 2 years?
Of course. No,
next
12 months. I think 30% is upside is clearly there. So I think in the entire pack, I pick zinc as a best commodity for next Diwali.
Ajay, copper, zinc, or would you go with aluminum?
So I think total base metal up till now was underperforms, we will say, because post-COVID, the concern was to be on, we can say, foot, because already we have seen lockdown and nothing was been working in the economy. So rightly, like Kishore told, main focus was the real estate market, because whenever we talk about real estate, around 200 sectors are actually been impacted positively with the real estate. But now things have been totally changing in last 4-5 years post-COVID. Now every economy has been trying to push the demand from industry side with the interest rate cut, and things have been now coming up. So I think definitely we may see copper up till now was underperforming, but slowly and steadily with the EV demand, supply side, everything will definitely going to be changed in 2025. If we rank all base metal, definitely I would go with zinc only, because zinc already we have seen
zinc as one,
zinc as
and then
first
second
preference, then aluminium, and last would be copper definitely. But I think slowly and steadily industrial demand would improve, as China before New Year itself they have desperately putting money in the economy, what we have never seen in the COVID period also. So I think every economy is working with interest rate cut scenario and everything. So I think in 2025...
You will stay invested in metals for 2025 as well.
We can see a gain like 20 to 25% gain in each item, like zinc, aluminium and
copper as well. All right, Pranav, let me come to you with energy as a space, and that is one area that is in the negative for 2024 until now, last 1 year that is. From these current levels, if you look at 2025, major global banks and brokerages are putting Brent prices to 75, 65, cities at 60 as well. How are you looking at a range playing out?
See, frankly speaking, I'm not much positive on the oil prices. If you see whatever the developments that have been happening in the Middle East, despite that we have seen this good correction in oil prices, the prices are down today as well, nearly 6% in negative territory. So unless and until there is any issues from the supply side, any effects on the supply of this, the escalation that has been going on in the Middle East, I don't think we see a bigger price move. Yes, definitely upside week. It is just stuck in a range. Downside $60-62 has been the base where the prices have been finding some support. And upside, we could see prices moving in the range of $74, $78 level. So chart setup also indicates a little bit on the negative side for crude. We have seen multiple breakdowns as well on the charts. So I'm not much bullish on crude. We may see there's some consolidation range, sideways moves in the oil prices, going ahead. But upside looks limited for me in the crude market.
Okay. All right. So, well, that's one area that can continue to see further declines as well. All this one is to you. Whilst we've spoken precious metals and industrial metals and energy as well, you look at soft commodities also. And within the whole chart that I'm looking at right now, in the last 1 year, if there have been any strong gains, it has been palm oil, coffee and cocoa. The rest of the commodities really haven't done so great. Rubber is another one, perhaps. Anything that you're picking up in this space?
Well, only that we are entering the northern hemisphere winter with following another bumper crop. Basically means that there's going to be ample supplies of the major corn, wheat, and soybeans into the coming northern hemisphere winter, and that's basically keeping prices under pressure. There has been a few isolated scares this year, but they have not been big enough really to unravel or to lift prices. So. Relatively weak pricing into the coming months for the grain sector. The soft sector, we're also seeing some signs of improvement, especially something like cocoa. We are seeing cocoa bean arrival at ports in West Africa exceeding the level we saw last year. So prices there had started to come down as well. But whether we're going to see a bigger slump from here, where we still more than double the long-term average, is probably a little bit questionable. It will take longer time for these balances to alleviate or to sort themselves out.
Point taken that. I have 1 last minute. I want to come to each one of you and ask you on what your top commodity would be as a trade in the next year. Kishore, let's start with you.
Of course, silver.
Silver is the place to be. Ajay?
I think that would be a two commodity. One is silver and zinc.
All right, silver and zinc. Pranav, what are you betting the most on?
I would be going for a 50-50 in gold and silver. And if I want to take more risk, I would add zinc to it as well.
All right. What would you say is the best place to be in sense of commodities in the year to come?
Well, if the rally in the metals continues, then you have to focus on platinum as well. It's a very small metal, but it's trading relatively cheap. At the same time, maybe a little bit of a wild card. The natural gas price in the US still dead cheap. Demand is still going up. I could see some surprise pickup there. In natural gas, AI is rolling out, data centers are building, electricity demand is rising. Someone needs to produce that power in the US. That's going to come from gas. So I'm bullish on gas as well.
All right. So silver, gold, zinc, natural gas, platinum. That's the whole bouquet of commodities that you could add to your portfolio for the next 1 year if you're looking to add commodities and, of course, make money out of that. Gentlemen, thank you so much for joining us today and taking us through on what really can be seen within commodities as a sector, the fundamentals therein, and, of course, targets that you can watch out for. And that's with wishing all of you a very happy Diwali and a very festive cheer going forward. With that, that's all the time that we have on this show. But stay tuned in CNBC TV18 as news continues.